Welcome again. Paul Raventhink Accountants here with Judy Reynolds from Opening Gates, and in this session we're going to talk about the ATO tax compliance this year. Now Judy, I know that tax is one of the most exciting topics in everybody's mind, and I'm sure for you it's something that you consider and are excited about every day.
I'm concerned about it, Paul. Perhaps not excited so much, but I do understand that to be forewarned is to be forearmed. So making sure that we have the knowledge we need to make sure that we're being compliant, that we actually got our ducks in a row before we need to have our ducks in a row. But what are the main areas that Tax Office is focusing on at the moment?
Well, this year in particular, they're focusing, as we've mentioned, some earlier sessions on income splitting,
Okay.
but they're also focusing on, in particular, work-related expense claims. Now, as a result of COVID, this area in particular has blown out with people working from home. So that's something that they have a real focus on, because I think the claims have gone something like from 2 billion to 13 billion from working from home. So it's something that's a focus on their radar. A continuing one is superannuation payments, making sure that employers are paying the correct amount of superannuation in a timely manner. The same thing with GST and PAYG payments. That's certainly something they're focusing on at the moment. And another one which they've really thrown some resources into this year is rental deductions.
Okay.
The claims for rentals have gone up significantly, and they're seeing a lot of errors in areas like interest claims, repairs and maintenance. And repairs and maintenance in particular is a very complicated area. It goes around what is an actual repair to versus what was a repair of an initial repair, what is capital. So that's a very complex area. So they're their main focuses this year.
So it's across the board, really.
It is, yeah.
Our previous insights were about income splitting, PSI, employee versus contractor. So if you haven't watched those insights or listened to those insights, I recommend that you go back and do that, given it's also a focus for the Tax Office this year.
Completely agree.
How can non-compliance impact small business? What's the outcome if we aren't compliant?
Well, it can be something as little as a smack on the back of the hand from the ATO, or significant penalties, interest and fines. So if we don't get it right and we don't comply, and bear in mind that there is a significant debt to the Australian economy from taxation, and the ATO are not as friendly as they were. They're being much tougher on people who are falling foul and people who are not making their payments. So the ATO, clearly have an agenda to collect as much tax as they can, because there's a massive black hole there, and so their focus is far more identified and extreme, if you like. So hefty penalties, and of course, nobody wants penalties, and they can affect the cash flow and operations of a business.
Yeah, I understand. And the audits, audit takes the focus of the business owner away from the important business focus, the operations itself, and it has that impact as well as actual cost of the outcome of the audit.
It does. There's a cost of the audit as well, and fortunately these days most businesses have audit insurance, which will cover the cost of the audit, but it does not obviously cover the cost of any ATO fines, penalties or interest. So it's certainly worthwhile having audit insurance anyway. Fortunately, touch wood, we don't have many audits, and it's something we don't particularly like to have to go through, but that's what we're there for, and hopefully people have audit insurance, so it mitigates and reduces the cost to them of the audit itself.
Yeah. So are there some common errors that businesses make that cause them to get into this situation?
Look, probably the two main ones are really accidentally, should we say, failing to report all their income, and the other one is basically overclaiming their expenses. They're the two main ones that come to mind at the moment.
Okay. And how does the tax office pick that up? Do they pick? I understand that some and now that we're lodging BASs, some monthly, some quarterly, that the tax office is getting more timely information, or more information really. Do they use the data from the BASs to determine if someone's potentially under-reporting income or over-reporting overheads, costs?
Well, look, clearly there can be a mismatch between a BAS and the financial reports that are being lodged, and of course they have sophisticated software now that can pick this up. And I'm not saying this is deliberate. Usually it's based around failing to keep adequate records. That's the problems that generally cause these things to happen. And then the ATO can also then focus on, well, if you start missing deadlines, then that can open you up to a risk of an audit.
Okay.
So that's important to make sure that you lodge things on time. The inability to pay is another issue. Lodge things on time. You can always then enter into an arrangement with the ATO if needed be to pay over a period. But if you lodge late, you can be significant to late lodgement penalties, which they are now imposing quite strictly, and it starts after 30 days. After 30 days late, I think it's $330, and after 3 months it's up to about $1,500. Now that's a big impost on a small business when the BAS return may be less than the penalty that's actually imposed. So the tip there is lodge your BAS returns on time, even if you're not sure they're 100% correct, because you can always amend them a bit later on, but get them lodged on time.
Good advice.
Yeah, and of course the other thing is one of the areas that people do have a problem with, as we've discussed in earlier sessions, is misclassifying employees as contractors. So that's once again a bit of a focus of the ATO.
Okay, and what can small business people do to help them be more compliant?
Well, coming back to maintaining adequate records, and ideally that means using software. There's some great software out there, MyOb, Xero, QuickBooks, Intuit and others that can help small businesses make sure that they are reporting correctly. Now, it's probably worthwhile too really considering using qualified bookkeepers. We do see areas where small business owners take on the bookkeeping work themselves, and they're not bookkeepers, and it's not hard. It's not easy. It's easy to make mistakes, but it's not hard not to make mistakes as well. So making sure that you've got the proper records and that they're being produced correctly is important. So you're reporting your income correctly, you're reporting your expenses correctly, you're reporting your superannuation obligations correctly, you're meeting your employment and employee requirements, and of course at the end of the day work with an accountant or a qualified bookkeeper to make sure that the records that you're producing are predominantly correct.
Mm-hmm. But ultimately as the owner, you're signing off to say it's true and correct and there's full disclosure. So leaving it up to someone else isn't the answer necessarily.
No, certainly not leaving it up to someone else, but yeah, you're right. You're the one that's signing off for making sure that what's being produced to the best of your ability is correct.
So Paul, how can small businesses better manage their tax obligations, particularly in those high focus areas like superannuation and GST?
Look, it just goes back really to pretty much the previous question, is make sure that they've got good record keeping practices, make sure their superannuation is properly accounted for. Once again, use automated software to manage that. Make sure you're paying your GST properly and accounting for it properly, and just regularly reviewing your payroll, because as we've mentioned in some previous sessions, that payroll changes and award rates, etc., are very, very complicated now. So that's where you need advice from certainly from your accountant, who may need to talk to a HR specialist. So it's a complex, constantly changing area.
Mm-hmm. So it's not, it sounds like frightening to some degree, that you could get it wrong. And that's, I think that we certainly need to take that on board, that we can't be, it's not a triviality, it's important that we get this right. And invest in our advisors to make sure that we are getting it right, because the consequences will cost us a hell of a lot more.
Yes, you're right again there, Judy. And as we know, there's only two things that are definite in life, and that's taxes and death. And I'm not too sure which could be the most hurtful. But I think if you're not managing your taxes properly, then it can come to bite you. And yeah, it's not a good feeling. But these things can look. No one can get it 100% right, but we want to try and get it 98% right, and that means using your advisors, using your bookkeepers, and reporting correctly.
And on time.
And on time.
Very good.
Okay, well, thank you again, Judy, for this session. We look forward to meeting with you all again and covering another topic.